Hi guys, today is December the 10th after the market close, and we're looking at a chart of S&P 500 here as usual and looking at the market direction. And I'm pretty sure you do also want to know what is happening here. We are in the midst of a fiscal cliff crisis, and the market is holding up pretty well compared to what it could have been. I think most of the investors are expecting some kind of a deal, and otherwise this market wouldn't have been staying up here like this. We are above that 50-day moving average, but they don't expect a deal to the last 11th hour like it has done in the past. The debt crisis and other crises, the Congress and the White House and all the people, they come together at the last minute, and something gets done and pushed under the door. So that is kind of an expectation that the market is bearing at this juncture, and you can see we have managed consecutively 4 or 5 sessions higher, grinded higher, which is called grinding, and then managed to finish the day above the 50-day moving average, which is not of any less significance. It's very significant technically because we're now above that 50-day moving average. We're not in that bear market territory any means. And so this is holding up well. If you look at it, you can see this was a shoulder, this was a head, and this is another shoulder. So it could be also called an inverted head and shoulders pattern, which is a chart popular pattern. If that is the pattern, we can draw a trend line here, which is the neckline, and measure the distance between the top and the bottom, and then project it up here to 1381 or 1375. It should the deal in Washington D.C. go through, because the stock market and everything is now held hostage due to the politics in the Washington D.C. and the market is just an extension of human expectations, and they are not very good at this time. So let's take a look at 15-minute chart S&P 500. This was Monday, this was Wednesday. Monday it opened up here and just moved up a little bit and then finished the day off. Not a whole lot happening. It's lethargic. The market is kind of slow, lethargic, and it's also a market that you can't even short. So let's go on, and because above the 50-day moving average, let's move on and look at some of the major stocks and what is happening here. I want to cover those more. This is the chart I tweeted all today about Apple's head and shoulders. Now you can see this could be considered as a left shoulder, or this could be considered a left shoulder, and definitely there is a shoulder pattern here on the right hand side. This, if this is considered as a head at 705, and Apple is now writing right here at that neckline. And also if you look at it, that 200-day moving average is now getting cut by the 50-day moving average from the above, which creates a death cross, and that is a bearish sign. Now all of this selling is taking place in Apple. Remember, it reversed here on 11/16, went up to 594, couldn't take that 200-day, came hurtling down here in this big candle on Wednesday, and then destroyed all the confidence. Now investors are really basically allergic to it, or they cannot trust this stock. As a result, we're not seeing a lot more being done in the stock, and the trust level of trust have vanished. This is what basically is happening. This was a gap on Wednesday. This is a 15-minute chart on Apple. This is what the gap looked like on 518. It made another bottom, moved right back up here, and then the move went here and gapped up again. But then again, it made a lower high. This was a high, this was a lower high. Then it went down again this way, gapped down today, which is Monday, and then tried to move up higher, but the high was 538, another lower high compared to 554. So the stock is making lower highs and lower lows, and this low has not undercut that low. Pretty soon this is another high. It made 533 and is bound to go down here, because also you're looking at it here, all these moving averages are declining. That 200-day, 50-day, and 10 and 12, these are 50 units, because not average here, because this is a 15-minute chart, but these averages are declining, which is also telling you exactly what this stock is doing. So it is a triangle right now. It's trying to form a descending triangle. That what we think about it is doing. Let's go back here and look at the other major stocks here. PCLN, this has been on the desk here. A lot of people are asking. This is a dangerous stock. Look at the gap here on the earning. Then it went up here, pummeling all kinds of things above 200-day moving. Today got downgraded and pummeled down to the 50-day moving average, which has created a 33-point drop in this stock. So that is what we had.